Hey guys, welcome back to the channel. So it's good to have you guys back. Today I want to talk about the different type of direct investing accounts that I recommend that you guys should get or look over in Canada. Okay, I'm just gonna tell you now one of the top three that I like. One is Wealthsimple, the other one is Questrade, the other one is your traditional banks. Right, so I'm gonna go through all of three of them and then give you guys the pros and cons between all of them. All right, I'm gonna do some screen sharing right now. So yeah, let's go. Hopefully you can hear me. So this is Wealthsimple. So just for your guys' information, there's Wealthsimple and then there's Wealthsimple Trade. Make sure you search up Wealthsimple Trade, not Wealthsimple. Wealthsimple will just help allow you to open up an account where you can have Wealthsimple manage your money, versus Wealthsimple Trade is the direct investing. It's a brokerage account where you get to choose the stock and you get to buy it on your own. All right, so it's commission-free stock trading, so you don't pay any fees when you buy and sell, which is pretty awesome, guys. And you can buy ETFs as well, and they have a bunch of them for selection too. It's commission-free trading and no account minimums, which is even better. A lot of accounts out there, you need to have $500 or $1,000 account minimum before you can open the account up even. But this one, nothing. You can get started with as little as $1, so it's pretty good. So what else you guys need to know? The biggest thing is that there's no fees. You don't pay $9.99 or $15 per trade. So then you're saving money there. And when you want to do something like dollar cost averaging, well, guess what? You're saving a lot of money, because that's when you want to monthly or bi-weekly buy shares over and over again, right? So the different type of accounts you can get, guys. There's the personal account. This is kind of like a cash account. There's no margin on it. If you want margin, you probably have to contact Wealthsimple. There's a direct investing tax-free savings account. This one, obviously, I recommend for everyone. There is a contribution limit. I think right now this year is about $5,000 for the year, but of course it's from the time you turn 18 onward. The program started a few years ago, so you might have up to a $60,000 or $55,000 contribution room if you're like, over the age of like 27. It's not bad. And then there's your RRSP account. You guys, be careful with this one. So I'm going to go through some of the important things you need to know. Any stocks you buy in your personal account, don't forget that if you sell it, a stock, you pay capital gains tax on it in Canada, right? 50% right now. The rules are 50% of it is reported as income. For example, if you make 50 grand at your job, at your 9 to 5, for the year, and you made $5,000 from capital gains. And you bought a stock for $5 grand, and you sold it at 10 grand, you profited $5,000. Then half of that, 50% of that, is added to your income. So $2,500 will be added to your income. So when you report your income to CRA and you get your T-slip from Wealthsimple Trade, you're gonna say that you actually made $52,500 instead of $55,000 or $50,000, right? But tax-free savings account is just that, guys. It's tax-free. Right? The money you put in there already is technically taxed. So any gains you make on this, you don't pay tax on it if it's a Canadian stock, so you're good. However, if you're buying American stocks, especially ones that pay dividends, guys, there is a withholding tax with the dividends on American stocks. Right now, I think currently IRS is saying taking 15% of your dividends as a withholding tax. However, if you buy Canadian stocks in your TFSA, problem solved, guys. It's completely tax-free, because why? It's within Canada, right? Ooh. Okay, next, RRSP. You want to be really careful with the RRSP. The tax rate is very, very high. So there's three different tax brackets, right? From $0 to $5,000 withdrawal. So okay, let me start from the beginning. So you can put money in here, and you can buy stocks just as you would in a TFSA or a personal account, but you get taxed heavily when you pull money out of an RRSP. Remember, guys, when you pull money out of an RRSP, you do get taxed heavily. Okay, so I'm just gonna pull it up here. It's from $0 to $5,000, and then there's $5,000 to $15,000 and over $15,000, right? Tax withhold. I'll tell you right there. Okay, so any withdrawals from your RRSP immediately subject to withholding tax, right? If you withdraw $5,000, withholding tax is 10%. If you withdraw between $5,001 to $15,000, the withholding tax is 20%. If you withdraw more than $15,000, the withholding tax rises to 30%, guys. Now, what you can do is like you can just pull 5,000 out, but either way you're still paying 10%. And any capital gains that you would have made, you would have to report that to CRA anyways. So if you are planning on cashing out and taking money out, do not get an RSP. And if you do want to get an RSP, remember it's for your retirement. It's long term. Don't take the money out. Leave it there until you're ready to retire. That's what that's for, right? So this is why I don't really talk about this account with most people. Most of the accounts that I talk about with people are the TFSA. You want to open up a tax-free savings account, a direct investing brokerage tax-free savings account, guys. So just remember that, right? Wealthsimple is pretty easy to use too. Yeah, so that's that. Yeah, so you can go over here, put your email, password, get started, just like that. It's pretty easy. You just want to search it up, right? Wealthsimple Trade, and the first link right there. You can click it, scroll down, and sign up. And then within 3 to 5 businesses, you'll have an account open. Next one, Questrade, guys. I like Questrade. They actually have a cool platform with Questrade where if you want to be a day trader, you can use their platform to day trade as well. If not, you can also do the soft investing just like the Wealthsimple one, but their fees are a little bit higher. But they do offer a little bit more, but check it out. So then they take, the minimum is $4.95 and the maximum is $9.95. Now what they'll do is, like, the amount of shares you buy, they'll take a small commission out of that instead sometimes, which is pretty good. And I find this a lot more helpful than the standard banks, right? And their program for actual day traders is much better. I've used it before, and I actually recommend it too. It's pretty good. They've had some awards before as well. So they do have the 3 of them, right? One is you open up one, and it's like same thing like the Wealthsimple normal account, where they will manage your money for you. You can just put it into a fund. I have one of those as well, but I also have the self-directed account where you pay a much lower fee than a standard bank, as low as $4.95. Sometimes they'll just take the commission off only. Their management fees are 0.25%. That's really low, guys, if you want them to manage your money. Of course, the third one here, I'm just pulled up a random bank. All the banks are roughly the same. Royal Bank, TD Bank, Scotiabank, CIBC, you can name it. They all have direct investing accounts. You can go and you can start here as well. Now these ones, all these banks, the standard rate for all of them is going to be $9.95 flat per trade, right? That's with no minimum account balance or trading activity. It's not bad. Some banks do have a minimum. You need a minimum $1,000 or $500, but our Royal Bank's not too bad. Now, if you have more than 150 trades, so if you are a day trader and you're using this, the commission will go down to $6.95. I don't really recommend this if you're a day trader. There are a lot of lags. You actually want to use a platform if you're a day trader. Questrade has a good platform. I know TD Ameritrade has a good platform, but TD Direct Investing doesn't. So if you're a day trader, you want to stay away from these kind of sites. You want to use the more the platforms that have more of the capabilities that day traders would need to use. There are a lot of perks that you get with going with the bank. If you're comfortable with the bank and you have a good relationship with them, sometimes, you know what, that's just what you want to do, right? I know with RBC, if you have more than a total of $15,000 more in all of your investing accounts, you don't have to pay the $25 quarterly fee. See, that's the thing with the Royal Bank and all the other banks too. You have to pay to have an account versus Wealthsimple Trade. There is no fee. There's nothing. It's $0. It's pretty much free to open an account and get yourself started. Now, let's talk about opening each one, right? So how do you open up a direct investing account? I'm just gonna go with let's pick TD Bank, okay? So look, open TD Bank direct investing account. There you go. That's it. There you go. First one, it comes up. Easily apply online right now. Just click the link. It says add there, but yeah. And then click on open an account. How would you like to invest, right? There you go, guys. So margin account, cash account, self-directed TFSA, RSP, RESP, RIFs. Of course, you can see with the traditional banks, you have much more options. I'm just gonna go through what each one of them are really quickly. The margin account. So you can't use margin on Wealthsimple. You can use it on Questrade. So that's a benefit, but you have to apply for a margin account and open one up. All the banks have margin accounts, so you're fine. What is margin? Basically, it's asset collateral, guys. That's what it is, asset collateral. So think of everything as an asset. Okay, your cash is an asset. You put $1,000 of cash in there, that's an asset. The bank says, okay, so if you have $1,000, we'll give you 50%, right? We'll let you borrow up to 50% of whatever you have, and the collateral is your $1,000 cash. So that means for having $1,000, they'll let you borrow $500 of purchasing power to buy stocks, meaning you can actually buy stocks worth the $1,500 with $1,000. Of course, you are using debt and leverage. If the stock price goes down, the bank can do something called a margin call, which means they take, they forcibly sell some of your shares and they take their money back. And so it's a risk, right? You can make a lot more money, but you can also lose a lot more money. I'll make another video about how I have like different trading strategies, long-term investing trading strategies with the margin accounts. So cash account is the same as a margin account without the margin. That's it, right? It's the same as the Wealthsimple account if you just open up a normal one. This is the self-directed tax-free savings account. It means you don't pay any taxes for having stocks inside the tax-free savings account. Of course, there is a limit to how much money you can actually put in here. Don't forget, guys, U.S. stocks are still taxed. It's just Canadian stocks are not. And the dividends get 15% withholding taxes. Canadian dividend stocks don't have any withholding taxes. So if you are invested in dividends in a TFSA, you might want to pick Canadian stocks, right? You pay less money that way. It's a great way to open and start up a dividend portfolio too if you want it. These ones, guys, you don't have to really open them, this and this one, but RESP, if you're older and you have children and you don't want to need the bank to manage your money in a mutual fund because it doesn't really grow, honestly, you can open up a direct investing RESP account, and then you can just buy an index fund, right? And the dollar cost average on an index fund, meaning you can put like $300 monthly and keep buying, right? $300 of an index fund like the S&P 500, and that gives you an average return of 8 to 12% per year anyway. So it's a great way to increase a lot of money in a safe way too. You just have to believe in the American economy, right? These are locked-in RSPs. These are for people like sometimes when you leave your job, they move your pension money into a locked-in RSP. So if you want, you can do that. I actually have one. When I moved from one job to another, I was able to move my money and then self-direct invest it myself. So it works. But yeah, there's a lot more options here, guys. Just remember, some accounts do have minimums. With banks, you are paying many more fees, but there's always a way to not pay a fee, right? Call the bank, find out. Like for example, with RBC, if you have $15,000 in all your accounts, you don't pay the $25 quarterly, right? Where is that right here? Just like that. There you go, guys. So I'm gonna walk you through the steps. Let's say we're opening up a tax-free savings account. Same thing, apply online. And then it's probably going to ask you to log in, and then you just walk through the steps. Oh, right. Guess I don't have access. Let's see. There we go. And then it's probably going to take you to the main site where you log in, and then you choose your application, and you can continue. With the Questrade one, same thing, guys. Open an account. See, margin, tax-free savings account, retirement savings plans, Forex, CFDs. You can ignore this for now if you want to just do stocks. Like I said, TFSA, right? By doing this, you can actually invest your money yourself. You don't have to buy a mutual fund. You don't have to listen to what the banks say. Thank you guys so much for watching. If you liked this video or if you learned anything at all, please give this video a thumbs up down below. Comment if you have any questions. I'm more than willing to answer any questions at all. And yeah, subscribe if you like, guys. Take care.